Okay. I just wanted to throw this out real quick, but it's not going to be quick. That's the thing. This is a very intro basic to crypto trading, very basic. How MercyBeat makes more than he loses. So the purpose of this is strictly entertainment. I am not a trading professional, and I'll even cover that a little bit further in this. Let me see here. Perfect time to check my messages. But I just wanted to throw this out there. People have been asking me questions, and they're like, and then they come back to me 2 or 3 months later, and they're like, okay, well, you didn't really explain that. You just kind of gave me the steps, and I don't. Can you go over that again, or they? I give somebody a high level, and I assume you understand something, and you didn't understand the details, or you didn't come up with your own details, so to speak, which is what I'm really probably hoping for, is that you come up. I give you kind of an outline, you fill in the details, and then you do it better than I would have done it, right? That's kind of the idea. So that's the idea of this, is I'm gonna throw out an outline. You're gonna fill in the details, and hopefully you're gonna come up with something better than I have, right? And then you share it. Boom. World becomes a better place. Okay. First off, you want to start trading. You need to make a plan. And this is really more important than most people ever think it is, but you make your plan to minimize your risk. Your plan is to make money, right? If you want to have your overall story of what you want to accomplish, your plan is to make money. Nobody's getting into trading to lose money unless they're making fees losing other people's money, right? So you need to come up with a plan where you are fairly happy that you have minimized all the risk that you possibly can. Once you have that plan, you need to practice it. You need to paper trade, right? And I'll get to that in just a second. But you definitely need to paper trade. I I can't emphasize that enough. Especially if you're just starting out, especially if you're just learning an indicator. Even let's say that, yeah, I've been playing with stocks since 1998, but I wouldn't consider myself. I wouldn't have considered my. I didn't learn my big lessons until 2017. That's when I learned my big lessons. So this is a long journey. This is a very worthwhile journey, but you have to have your plan and you have to practice it. Now the next part is slow is smooth and smooth is fast. All right. So what would be smooth? Smooth would be having a lot of winning trades in a row, right? Something that would not be smooth, a rough road, so to speak, would be that you have two trades, three losses, two trades, two losses, two trades, three losses, two trades, one loss, something that's not smooth, because if it's not smooth, then you're not gonna accomplish what you want in a reasonable amount of time. And the smoother you can make that process, the faster you're gonna get through it. And in this case, you're gonna make more money, right? So the more you do it, the smoother you can get it, the faster it's gonna be, the faster you're gonna make money. The more you're also the less stress you're gonna have in your life, right? So if your plan that you come up with does not work, right? Don't throw everything out the window. Isolate what's not working in your plan. Is it your plan, or is it that you are not following your plan, right? Because if it's something in your plan, you should have multiple steps in your plan, right? You should have practiced what you're going to do in your plan. That's very important, right? So come up with your plan. If you don't stick to your plan, if your plan has stop limits in it and you're not setting stop limits, or your plan has targets and you're not preparing to sell at those targets, then you're not following your plan, right? And you are doomed, right? Too many times people have held on to things too long, and so you got to stick with your plan, and your plan has to involve getting rid of things that are not making money. Plain and simple, right? I threw on here the Dunning-Kruger effect, and I wanted to throw this in because your plan is going to change over time. My plan back in 1997, 1998 is very different than the plan that I use right now. I'm going to give you some insight into what my plan is, but I suggest you look into the Dunning-Kruger effect, because there is a point where new people do very well at something, and then all of a sudden, for an unknown reason to them, it all goes to hell very fast. And I call this the confidence curve. The more confidence you have, the bigger of a fall you're going to make financially. But the Dunning-Kruger effect is a good explanation of that. If you haven't heard of it, you need to read about it. These are important concepts for philosophy in your life, right? So, when it comes to your plan, when it comes to how you're going to trade, there's Uncle Billy. I'm going to divide this up. There's Uncle. This is pertaining to motorcycle riding, but the philosophy is the same across a lot of things, and I believe trading is very much like this, right? There's Uncle Billy. There's going to the Motorcycle Safety Foundation, and then there's learning on your own, right? So you go to Uncle Billy, and he shows you how to use the clutch. He shows you how to shift. He shows you how to turn the bike. He shows you how to hit the gas, and he shows you how to hit the brakes, right? He shows you all the things, and he spends, a month with you riding all the time. That's one way you can learn to ride a motorcycle. Another way that you can learn to ride a motorcycle is you can just get on a motorcycle and learn that shit yourself. And then the third way is to go take a Motorcycle Safety Foundation course. Now, the best thing that you can do is obviously take the Motorcycle Safety Foundation course, right? It's taught everywhere. It's at community colleges. It's information that's readily available. You can get your hands on all the course material if you just want to go through the course material, right? It's easy. It's not expensive, so it's available to everybody. You see where I'm getting with this? Now, Uncle Billy is your YouTuber, right? And I'm going to throw myself in that category. I'm Uncle Billy. Hopefully, me explaining this to you will help you stay away from the really bad Uncle Billies, right? Because you follow these guys, and they're telling you, buy this, buy that. I'm not telling you to buy anything. I'm telling you to learn to trade on your own, right? Because if you learn from Uncle Billy, you are in the highest category of people that are going to get into a motorcycle accident. Much higher chance of you getting into a motorcycle accident than if you just jumped on a motorcycle and learned by yourself, right? The best way, Motorcycle Safety Foundation course. So from that, your best bet is to go buy a college book on economics. Your best bet is to get a 30-day subscription to Amazon Unlimited Book Club, or whatever the hell that is, and read a good book, a solid book, a good recommended book on how to trade, right? So you have very cheap options out there. You don't have to spend a lot of money trying to follow a guru, in order to learn how to trade. That's important. But you have to make your own plan. So the next thing is going to be do your own research, right? So you need to ask, what does that coin do? What kind of value does it bring to the market? What kind of utility does it have? Is this coin too good to be true, right? Is it promising, 20% interest on your staking or on your holdings daily or weekly or monthly or sometimes even yearly, right? I mean, that's a lot. There has to be something validating that high interest rate on a coin. And we're moving into that kind of tricky finance math, right, with these coins right now. First it was Bitcoin, hey, simple shit. Then it became contracts, then it became layer 2s, DeFi, lending, right. So these things, you have to look into it. Does it have, if it's a coin, if you're starting out and it's a coin that has rocket or moon or something in there, if it's what we call a meme coin, you need to stay away from it. You're here to make, if you're going to start going down the trading route, if you're going to start and do this for 10 years, you need to stay away from the serious trash, right? I hate to say it, but it's like a woman at a club, right? You see the high value women and you see the trash, and you need to stay away from the trash. You just got to stay away from the trash, right? You need to find your own style and your own trading tools, right? So I'm going to show some indicators, but you need to do that stuff yourself. You need to figure that stuff yourself, right? So the other thing is don't stop researching. All of this stuff changes very fast. Ethereum is coming out with a merge. You should be at least reading a little bit about what that impact is, and maybe not believe all the people that are saying the sky is falling, right? I'm just saying you need to come up, you need to keep doing your own research and keep reevaluating your opinion. Things in this field change, right? So one of the things that I wanted to throw out here, which is which falls underneath the style, is one of the things that I do is my style of trading. It looks a lot like my hodl, right? And what I use is something that is referred to as the mall strategy for investing, right? And if you look at a good mall, it'll have a J.C. Penney's, it'll have a Macy's, and it'll have a Gordman's. Well, maybe not a Gordman's, maybe something else. But these are called anchor stores, and you need anchor crypto. You need to come up with the 3 cryptos that drive everything else in that mall, right? So right now that's Bitcoin, right now that's Ethereum, and for me, that's also BNB. I'm not saying that those have to be your 3 cryptos, but you need to make sure that these 3 cryptos are going to be around. Maybe one of your anchors is Monero, but you need to have your anchors, and then your trade, and then so you're gonna know these anchors. They're gonna be like stores that you go to once a week. You go there once a week. You see what they have in stock. You see what the new merchandise is, and you look for the stuff on sale. Right? You're gonna know every aisle and floor of these anchors, and when you trade, you're gonna place a higher amount of a trade on these anchors, right? So Instead of $100 trade, you might make a $300 trade on one of your anchors, right? But I also do the same thing with hodling. Bitcoin, Ethereum, BNB. That's what makes up the majority of my hodl. And then there's a bunch of little shit coins that are just filling up the spaces in between, but none of them are major players, right? None of them are big stores. None of them are the anchor stores or even close to as big as an anchor store. So hopefully that makes some sense, right? So let me see. So step 2 is going to be picking your entry point. So let's go to the slides or the charts here. We're going to go over a couple trades that I just recently made. And I'm going to elaborate a little bit about why I picked those entry points, right? First off, I picked the entry points on the 2 hour. This is a little habit of mine that I've been doing, right? Is trying to use the 2 hour a little more, and this is because I'm changing up a little bit the way that I'm doing things. Basically, I'm using the 2 hour more than the 4 hour. But it's a small change to how I'm doing things. But so what I did here is, as soon as the 2 started trading above the 1, I put in a buy. I put in a buy, a limit buy at 94 cents, basically 95 cents. Well, technically 94.8, right? 0.948. And that limit cost me less money than doing a market buy, right? Now, why did I do that? Because the moment this 2 started trading above the 1, I knew I wanted to be in this trade. That's just how I'm using this indicator, the TD sequential. There are a lot of really good indicators out there. Since we're talking about indicators, I would suggest that you go to this YouTube channel called Trade Pro. Now, this guy busts into just about all the indicators that you can use for free on TradingView. He does a great job. Go subscribe to him. I like to try out some of his methods by paper trading, right? Because I have a plan and I'm not making any drastic changes to my plans, just little plans. But this guy right here, when you're looking for ways, when I'm talking about looking for ways to find entries, and make your buys, this is the kind of stuff with the indicators that you should be looking for, right? So you're going to go to this page and you're going to look at all these indicators and you're going to go, okay, I'm going to grab the first 5 videos that say it has the greatest 100% win rate. You load up, you've got all 5 indicators up on Trade Pro. You're probably going to do yourself a disservice, because if you look at this video, you'll notice that he very rarely uses more than 2 to 3 indicators at a time. Now, he probably uses a lot of indicators. He probably has his short list of indicators that he likes to flip between things and use on different time frames, much like I use the MACD on the larger time frames, but when I get down to the 4 hour and the 2 hour and even lower, I want to be using the RSI, right? So this is what we're talking about. Pick your entry level into the trade. Now, that's what I did. And once I did that, right? Once I had my entry level at the 2 candle on the 2 green, I put in my limit buy, and the price came down and hit my buy. So I wasn't chasing the candle. There's a very good chance that I wouldn't have gotten into this, but my plan tells me that that's how I do my buys. And it works most of the time. I don't know what to say. It works most of the time. For me, it might not work at all for you, but for me, it's worked most of the time. And when I place these buys, right, sometimes if I really, really want into it bad, I'll sit on the 5 minute. So I sat on the 5 minute, and I think I sat on the 5 minute until it finally from here to here. Right? So let's see. How long is that? An hour. It took an hour for my trade, but that was my plan. And now look at where we are. Hopefully we're consolidating and we're getting ready to go back up. Well, this is the 5 minute, so. But that's the thing. I came up with my plan on how I want to enter that involved what my time frame was, that involved what my indicators I was using. Another one was that every other things, other cryptos were already showing this pattern but had already taken off, right? So I'm using other crypto patterns, other crypto coins as patterns to look for on coins that I can still get in on, right? Hopefully that made some sense. But if you look here, I one, I don't pay for TradingView because I'm poor, and yeah, let's just go with that. And I don't have a lot of indicators on here, and the reason that I don't have a lot of indicators is also that too many indicators, trying to juggle too many indicators is going to be confusing. You do want to try and keep this simple as possible, right? So, you've picked your entry, you've learned your indicators, go to Trade Pro, watch his videos, subscribe to his videos. This will be a great place to start, and then you can go and read more, right? Like I think candle patterns, I think EMAs, right? And TD sequentials. That's just how I learned. That's not the best way to trade. I don't know what the best way to trade is. Maybe Trade Pro does. He's definitely helped me in my trading, but I'm still using the same indicators. So keep that in mind, I guess, right? The next step that you're going to do now that you have placed your buy, or now that you know where you want to buy, is you're going to set your stop limit. So you need to set your stop limit knowing that you're going to lose money. You're going to watch it go down, but you are not going to tolerate it going down forever. You are not going to hold that bag. You are going to set your stop limit, and you're going to set that stop limit in stone, right? So you need to figure out what percentage of your trade you're willing to bet to lose, right? So this is so important. This is important, like using a meat thermometer is important, all right? So I tell everybody, if they come over to my house for chicken, or they come over to my house for some type of beef dish, right? I use that meat thermometer. And there's a reason why I use that meat thermometer. Because if I don't use a meat thermometer, then I'm just fucking around. Because if I'm not trying to go for perfect, then I'm just fucking around. If I want to go ahead and undercook it and serve some raw ass chicken by accident, then sure, I won't use a meat thermometer. If I'm gonna throw a roast out that's overcooked and tough and dry, then yeah, I'm not going to use a meat thermometer. But if I want to eat that, right? If I want to live off of that meal, if I want to present that meal to other people, I'm going to use a meat thermometer. I'm going to get that meal perfect. And that's exactly what stop limits are. If you're not using stop limits, you're fucking around. You're eating raw chicken and dried fucking pot roast, man. I don't know what to tell you. Getting out, having something stop is never bad, right? There are plenty of times if you get stopped out of something, right? Let's just, for giggles, go back in time and say that we saw this 1 and 2. Now it's really far away from the EMA, so I would never take this 2. But we saw this 1 and 2, right? And we came in here and we said, well, this isn't even a good one. But let me see. Say we saw this 2 right here and we bought on this 2, right? How much are you going to lose on this? Because if we look at this right now, and my ballpark, my rule of thumb ballpark is always going to be 3%. So I'm always going to look around 3%. You need to figure out what your risk reward is. Now, I like to put my risk reward on autopilot. So if I know that I'm only willing to lose 3% on a trade, then I'm using this risk reward ratio here, and I'm using a risk reward ratio of 1.5. Why am I using a risk reward ratio of 1.5? I have no idea. Someone when I was a child told me that's your risk reward ratio. So that's what I set it at. So that's now my target. So if I had gone into this trade all the way at the top, I would have set right here my stop limit, and I would have definitely looked at getting out once it got to my target up here at $1.08, right? But I didn't. We're talking about stop limits. This is when a trade goes bad. Stop limits are for when a trade goes bad, right? So, or when a trade is going south. So I would have been stopped out here, and I could have just come back in and taken the 2 here. Now, for less money, I can buy the same amount of Matic. Or for less money, I can now buy more Matic, right? So if Matic so I don't need to worry about the top because I've set a 1.5 on this Matic trade that I'm in. So I can raise that up to here, which is where I last bought in. If it gets to 9%, it's money. You're winning. If it gets to your stop loss, it's money. You're winning. You've just got 2.5% more than you were stopped out. So you're still winning. You're not in the negative anymore. That 2% sounds like nothing to you. That's fine. That 2% is still winning, and that 2% stacks up, right? So let me adjust this down. So I'm going to want to get out of this at 1.5. I'll set it there. That'll be good enough, right? So in this trade right here, I decided 2.4 because in the time of making this video, I don't believe that we're in a bull market. So I'm setting my stop losses very low. If I was positive we were in a bull market, my stop loss might go a lot higher, but then my risk reward would also go higher too, right? So if I was willing to risk 5% on this trade, well, then what my target, what I would hope to get out of it would be 7%. And that's very, very super common when you're in a bull market in the crypto space. So let's see. I'm going to have to look at my stop limit to figure out where that was before, but we'll just put this back. because this trade will hopefully, I'll be raising my stop limit on it before I go to sleep to break even. So set your stop limit. It's not the end of the world if you get stopped out. You want to get stopped out if it's going down. You don't want to take an 11% loss. It's just not good for anybody. It's not good for your stress levels either. This is why I don't freak out on the markets. This is why when trades go bad, I don't freak out, because I've already planned this out. This is built into the cake, so to speak, right? Me losing a few trades is built into the cake. So, talked about this a little bit. You want to set your risk versus reward. You want to have your break-even stop limit. When your trade goes up, right, you want to get your stop limit higher so that if it does go down, then you haven't lost anything. You haven't lost your 3%, right? So that's part of my plan. It seems like it should be part of everybody's plan. And then that's your break-even stop limits, right? So once you hit your target, you don't have to sell. A lot of times what I do is when I catch that it's hit my target, I set my stop limit. It may be 1% above it, but at least I know that I've made that trade, that I've made that 4%, 5%, right? That was my target. And that's how I continue to advance forward, slow and smooth, right? And so that's how it works. Slow is smooth, smooth is fast. Okay, so trailing stop limits. This is something that you want to get into the habit of doing. So let's pretend that ETH on the 15-minute is maybe ETH on the 4-hour, right? So you'll see these sometimes, and I use them, is I'll draw a red line, right? So my break even right here, oops, oh man. I lost the line. I'll be damned. What? There we go. All right, so my break even will be a little bit above where I bought in, and that will be my break even plus my buy-in plus the fee, right? So that's what I mean that by break even. That's the term that I'm using. But as this goes up, I will raise the stop limit. So if this was the 4-hour, my stop limit would probably be here, or depending on how close I was to my target, here, right? So I'm raising my stop limit after every, if I'm playing the game on the 15-minute, maybe it's every 30 minutes I'm raising my stop limit. If I'm playing it on the 4 hours, maybe it's every 8 hours I'm raising my stop limit, or every 12 hours I'm raising my stop limit. But I'm letting my stop limit trail my profit, right? So if I set my stop limit right here, right, and I get knocked out, that's fine. I've made my profit. Remember, my break even was down here. Everything above this line is now profit. Sure, I might have gotten stopped out. I could have gotten stopped out right there, and then I would be out of this trade. But that might not be a bad thing, because a lot of times this stuff just goes sideways once you go up. Even if it's 2 or 3 candles, sometimes it will just go sideways. Maybe you just want to get your money out of that trade. Maybe there's another trade you want to be in, right? So hopefully that makes some sense on trailing stop limits. That's part of my plan. And that's one way that you make sure, because you don't just want to leave your stop limits down at the bottom. That doesn't make any sense. Sell, sell, sell. Oh my God. You can't go wrong being in cash. Well, you can feel bad because you're missing out on profits, but you can't go wrong being in cash, right? You can go wrong spending your cash. There are assets and there are liabilities, right? Having cash is still an asset. Having a cell phone that you have to make a monthly payment on is a liability. Buying a plastic figurine that you have to throw into the trash is a liability. But holding onto your cash, that's still an asset. So when in doubt, if you get a bad feeling, just bail, right? Don't worry about it, especially starting off. Never hold on longer. Always take, if you make enough for a night at Taco Bell, but you're getting a bad feeling, just take that profit and go to Taco Bell, right? The other thing is, use your indicators to figure out when you want to sell. So if we go back to Ethereum here, and if we go back to that 15-minute marker, we can see that on our TD sequential, we got a 1 to 9. Now, when I'm looking at the TD sequential, maybe I can find something here. Yeah. When I'm looking at the TD sequential, one of the things that's telling me that I need to get out, even if I haven't hit my trailing stop limit, is if I see a 1 to 2 red candle. And this is just how I play it, because since I buy on the 1 to 2, and that's one of my indicators that gives me a reason to buy up, it would make sense that if the stars align with a red 1 and 2, then I should be going down. For instance, if we've really popped up high and I see a 1 and a 2, I just want to sell. I just want to get out. There's a possibility that 2 is going to turn into a 3, and if a 3 turns into and if it can turn into a 3, it can turn into a 5, and all the way down to 9. So keep that in mind. Use your indicators to also figure out when you want to get out of a trade. That's what they're there for, right? Once again, use your stop limits if you can to get out of the trade. Don't market sell if you can, right? Because you're going to get, I believe that, I mean, it's all going to depend on how you're doing this, which exchanges you're using. But setting your stop limits is going to be cheaper than just hitting that market button all the time. So learn to use limits. Learn to use limits when you're going to sell also, right? So that could be that as soon as it hits this target, you're walking away, but you've got to go take a shower. So I'm going to set my target, and if it sells while I'm taking a shower, then I'm out the door and continuing with my day. But as long as you set your stop limits, you're not going to lose anything. If you start setting target limits, you better not be on the wrong side of that confidence curve, the Dunning-Kruger effect. So I believe that's it. So there's different things that you can do. You can take all your profit. You can sell, and you can just take your profit. Take whatever you made off of that trade. If you made 10% on a $100 trade, that's $10. You can take that $10 and you can just go to Taco Bell, and don't feel bad because you made $10. You made that Taco Bell. That's going to be awesome Taco Bell. Trust me. You're going to enjoy that Taco Bell, right? Much more than if you're sitting eating Taco Bell after losing a trade because you didn't set stop limits after being 10, 15% down because you didn't set stop limits. So the other thing is the let it ride. So if you put $100 into something, let's say you put $100 into Shiba Inu, and it went up 10%, and you now have $10. Well, you could just sell $100 worth of Shiba Inu, and you could just keep those coins, throw them in your wallet, and forget about them for 4 years. Maybe it'll be like Doge, right? You never know. But what's $10 of Shiba Inu going to be worth if it 100 times, right? So that's another way that you can take profit. That's something that I do a lot of times, right? And I like to say that's just take the profit and hodl it, right? The other thing is that instead of taking those coins and throwing them into a wallet, you get your initial trade out, you get your $100 out, and you let the rest of it ride, right? So you let that $10 of Shiba Inu, you let that $10 go to $11 or $12 worth of Shiba Inu before you sell all of it, right? But your plan is still to sell it. So you do have ways to sell. There's more options for selling than you kind of think. And you got to divide this up. You got to come up with a plan that works for you. That's really the important thing, right? So that's it. Hopefully this makes sense. Hopefully this helps somebody. Don't go to internet gurus and buy their courses. Learn to trade on your own. Do this on your own. Let this be your learning experience. You're going to lose money no matter what. So make small trades, right? And if you lose 3% of $100, that's $3, right? So if you have 10 trades out there, if you do 10 trades, you lose 5, but you win 5, right? You're going to be down $15, but you'll actually be up because those other 5 trades will pay out more than $3. They'll be $5 to $6, $7 a trade. So right there, you're looking at $25 to $30 is what you can win versus the 15 that you know you could lose, right? And that's how you win. 50-50. If you lose half of your trades, you can still win at trading as long as you maintain your discipline, as long as you maintain your plan that you came up with and that you practiced by paper trading, right? And paper trading is just marking on it where you would have bought. And don't buy. And watch it and learn and keep a little spreadsheet, keep a little notepad. I just kept a notepad and I just put winning trade, failing trade, winning trade, failing trade. But it was the strat that I was trying, or I was trying something new, right? So hopefully this will work really well for you. Let me just kind of leave you with one last thing here, and that's going to be make sure you're not in a rug pull. I just want to throw that out there. I'm just going to throw out rugdoc.io here. Use it if it's high risk, if it's medium risk, if it's some risk. Stay the hell away from it, right? I mean, all of these coins are risky. You don't need to be diving into the riskiest part of the pool. You don't need to be diving into the smallest pool with the biggest sharks. That's what you're doing with this. So I'm going to leave it at that. Hopefully this helps somebody out. And yeah, have a great evening and safe